Today is Wednesday, August the 12th, and I'm going to show you that there's still a little bit of upside left in the market. But first of all, the oscillator ticked up just a little bit, not as high as the Monday, but ticked up a little bit. The volume was lower than any day last week or this week. So we haven't seen this kind of low volume since the 27th of July. But let's look at the charts, because on inspection, you'd think that we hit the 100% and pulled back today, but we didn't really. If you look at it on a smaller scale, like 15 minutes, we didn't hit 33.93. Let's go into 1 hour and let's go back and make sure that we've picked our top properly. And where is that high, the previous high? Let's go back here. Let's just pull this up. And you can see that our 100% was hit back here, February the 19th at noon. So that line is pretty darn accurate. And here you can see that we did not hit it today. So tomorrow there's a likelihood that where we closed today around 33.80, there's room tomorrow to go to 33.93 before we find resistance. But now this is the second day in a row that we are finding sellers hanging out just below the 100% fib line. But we went a little bit higher today before the sellers stepped in, but only a little bit. The other charts tell a different story. The Dow Jones is still a fair distance away from reaching its COVID high, and the NASDAQ keeps bouncing around off of these two Fibonacci's on two different waves, 150 and 138.2%. So both of those, let's move that a little bit to the right to get it out of the way. You can see that now we've bounced around that, and that does seem to be solid rejection, and we can close that gap. Stocks that we're watching, of course, Apple did the complete opposite of what it did yesterday. See in here, finished a little bit higher. This is not a new closing high. The closing high was made about 5 days ago, but we're heading up in that direction. Still a strong stock. Remember, I'm still short the September 400 puts. I think that's pretty safe, and they were worth $5 each. So that's $2,500 in a month. That's a reasonable approach to the market, I think, or reasonable expectations of gains given where the market is right now, in rather high territory. You know, if I had my choices, I would say that the market is going to wait for the Dow to catch up. We will play around with this 100% on the S&P. We may go a little bit lower on the NASDAQ, and we're going to wait for the Dow Jones to catch up, and then the fun starts. Caterpillar, still on a weekly basis, still above that trend line. NVIDIA, getting rejection at this 200% Fibonacci, that's important. Home Depot, big, huge day today, and coming right close to this 138.2%. Or if we take a different, I just can't grab that one, but if we take a different wave, we were rejected at 127.2%. So that's an extension Fibonacci. That means it's a 3-point Fibonacci, a low, a high, then a low, and then you measure the move upwards to try to replicate the first A to B from point C. Whirlpool, still strong, still moving towards 216.46. Any other stocks that we want to look at? Let's look at the banks overall for financial strength. And they were decidedly mixed to flat. Goldman Sachs was the only one that we followed that was up. The others were all down by about 0.5% to 1%. So I'm still thinking that the scenario that plays itself out is that the S&P and the Dow the S&P and the NASDAQ just sort of channel along, waiting for the Dow Jones 30 stocks to pick up.